big step higher, though the S&P 500 is still trading sideways more or less. The VIX has been in the news, obviously, because it has been trading near all-time lows, and it's known as the fear gauge, and so that's prompted a lot of headlines to suggest a lot of complacency and relaxation in a very in an atmosphere that's very optimistic. But that doesn't, just because the complacency's there and just because the VIX is trading near all-time lows doesn't automatically mean the market has to correct. Keep in mind that the VIX can establish new lower ground as its new base point. It did that just earlier this year when it started to trade between 11 and 12 and traded between roughly in that range for about 4 months. And it never had done that before in the history of the VIX, to trade that long at that price range. And meanwhile, the markets continue to trend higher over that time. So currently, the VIX may be establishing its new base point between 10 and 11. And while it does represent a lack of fear, using that as a basis to sell won't help you make money. It might actually derail you from winning positions if you react prematurely by trying to predict the market correction on that basis alone. So as always, let your stocks tell you what to do in a non-biased manner and take a fluid approach. Speaking of stocks, big juggernauts like Amazon, they may not have the huge upside moves of the smaller leading stocks, such as COHR, that's coherent, but Amazon does have a clean pattern. It does obey its 50-day, and it's relatively non-volatile. So one who's maybe more conservative could potentially sit in such a name for a number of weeks, if not longer, if it continues to endure. It's obviously in the same camp with Facebook and Netflix. They're all leaders in the tech space, and that's a great advantage when it comes to the tech space, because when any of these companies come out with a new product or service, and we've seen Facebook and Amazon roll out a number of new ideas, they have a huge network effect, and that automatically puts that new idea in pole position. And so, in other words, strength will beget strength very nicely here with these sorts of names. And it is the reason why when you've got these names that have managed to stay at the top of the pyramid for as long as they have, for many years. We've seen that phenomenon with Google, obviously, who clearly has that advantage as well. But I wanted to get back to COHR briefly. That one is, we mentioned that in our focus list review today. It pulled back close to the low of its gap up earlier today, and so it was completely in viable range with minimal risk. And while it's had a big move over the last several months, the move includes two constructive gaps higher on, rather three constructive gaps higher on its prior strong earnings reports. The company is riding a very steep growth trend as its industrial lasers are involved with OLEDs, OLEDs displays, which are used increasingly for televisions and mobile devices. There's been a lot of news out about how conventional LEDs cause damage to mitochondria. They result in more eye strain, especially these days with more and more people putting more time with these devices. Yeah.
What stock are you talking about?
COHR, coherent.
Oh, coherent, yeah. Yeah, I just stepped away for a second, so, okay.
Okay, yeah. So yeah, you can see on here that it's had three gaps higher over the last three earnings reports. And so it's had a nice move, but it's doing the things that a leading stock should. And it's in the right space. It's the leader in OLEDs. Those are organic light-emitting diode displays, and they're used for all these devices that are continuing to have a very strong growth. I mean, the number of people coming online onto the internet and also using mobile phones is going to increase by over 1 billion over the next few years. It's not a phenomenon that's plateauing by any means. So this company's positioned to take advantage of that growth through their OLED technology. And there's been a lot of negative press over the last few years about LEDs, and you can see for yourself if you use if you're staring at your screen under normal conditions. Some people are more sensitive than others, but the blue light that's emitted, which is a short wavelength, can harm one's mitochondria, and that is the building blocks of good health. But at the very least, it can result in eye strain, headaches, if you're sitting there for a number of hours. So the company's positioned to take advantage of the health trend here. And just as an experiment, if you want, download one of these, like it's called Iris. That's one of a few of these. What they do is they take a lot of the blue out of your screens, and you'll notice your eyes relax when you do that. Another stock is TTD. That one we mentioned as one that might become actionable on the basis of establishing a floor on today's gap higher on again, strong earnings. It did pull back very briefly for about 15 minutes. It established a floor over that time. And then one could use the 620, the 6-day and 20-day exponential moving averages to track the stock as those lines did cross at around 48 and change, I think about 20 minutes after the open. And now it's trading, what's up, 50.5. So it's well extended here. But again, the 620 is a nice device for people who can afford the time to optimize one's entry and exits. It's not required because obviously you can set more established grounds on daily charts as well. You just might not get as clean an entry, and especially something like this, which is moving fast, it can get away from you very quickly. And at that, I'm going to turn it over to Gil so he can have his say on the markets and some stocks.
What? Oh, you talking to me? Sorry.
You?
I'm entranced by this market. I just can't help myself. One name. Whoops. What are we doing? You can see this one up here, Electronic Arts. I like Dr. K was talking about Coherent after this Bible gap up. And what I like about this is notice how it's holding really tight. And you'll see this occur if I see a Bible gap up and you get some really tight action for a couple of days and something. Here's iRobot. This is one I played. I like this. It's very tight right after the Bible gap up, and you can see that the ranges are tightening up. So if you get that after 2 or 3 days, I'll jump on it, and I'll look for a move to occur relatively quickly after that. So another name that looks like that is Electronic Arts, and these guys are going to make, they had a blowout quarter, and they're going to make $4.97 in 2019, $4.22 in 2018. So even, at a 30 multiple, you're looking at $120 stock, I think. So this one looks to me like it's going to go higher, and so I'm long this in here. You can also see Twitter. Twitter, I think, is going higher. Right now on the weekly chart, you can see, and these, of course, are names that aren't on the list right now, but they're things to look at, I think. So if we look at the weekly chart, you can see that you're coming up into this area perhaps of some overhead, but it seems to be holding up very tightly. One of the things I was looking, I think I talked about this last week, is that if you're interested in Twitter and you kind of missed you had a bottom fishing Bible gap up here, and the first day after the Bible gap up, it held that low. So if you're watching that, all you know is it's opening near that low. You can take a shot at it and use that as your stop. I think that was like 1576 was that low. And then it just took off and went higher. And then I think up here, Mark Cuban said that he thought they had their act together. And you had a couple of pocket pivots. Well, this one didn't quite clear the 200-day moving average. This one did. And so last week, you guys will recall that I pointed out that what you want to watch here, now that it's above the 200-day line, if this thing's got more upside, it's just getting going, okay? So, I mean, it could fail, obviously, but the 200-day line becomes your reference point. But, I'm looking for this thing to have some sort of a pullback in here, and it isn't doing it. It's holding tight and bouncing off the 10-day line today, and it looks like it's on track to trade enough volume for a pocket pivot, but I think we'll see. Maybe it accelerates. But instead of pulling back to the 200-day line, which I think is even more constructive, it's held tight, which is what I mean when I'm saying this is more constructive than pulling back to the 200-day line. So that looks Very interesting to me. Anyways, let's see. And I'm long Twitter, actually, so I've been playing it since the Bible gap up, or the bottom fishing Bible gap up. So, and you got EA, I think now is pulling in, this guy, you know, you had the Bible gap up, and we've been talking about this one for the last couple of weeks since we put it on this day. And it's held tight. Notice how you get the volume draw up in here, and it's right on top of this base. So you've got easy reference points for a tight stop if you're going to bail out and, you know, if it fails. But it didn't happen. So instead, you move up towards the 100 level. There's a 100 level. You got close to it, but you run into some profit takers, and that makes sense. Now you back down into the 10-day line. My guess is it's going to make another run for the 100 level. And since I'm long the stock, I'm hoping it does clear it. So, but that looks pretty decent, I think, among the names on our list. We added Nvidia the other day. You didn't talk about Nvidia, did you?
No, yeah.
But Nvidia looks good here. Of course, you wanted to buy. We put the alert out early in the morning, and this thing held on the 620 chart. It held right at 114, right at the opening, and then it turned straight back up. And so at that point, you could have just jumped on it once it has a low. I mean, the thing with the lows is, okay, you don't know whether a low intraday is going to hold or not. But once you see a low, you can act on it. And if the stock comes in, it comes in, and you just back away, and then you get ready to come back in if it sets another low. And so you got to, you know, number one, it helps have a margin account, number one. And number two, you can give it a little more room. If you don't have a margin account, you can't flip back and forth. So you guys must be buying Electronic Arts. I see it pinching up to 108.70 now. In any case, I think that looks, this looks strong, and it could be considered a late stage breakout. But remember last week I was talking about this thing at length, and I pointed out that it's spent enough time building a base that you could get a breakout after earnings. So you had an actionable Bible gap up. You could have jumped on it there. Then again, yesterday it held right at the top of the base and ran up to 130 and change, and then it's backing up. So it's probably going to flitter around here, give the 10-day line a chance to catch up to the stock, and you could look at maybe buying it on a pullback. So now, you know, yesterday when the market came off 140 points on the Dow, I guess, and things were actually looking a little bit scary, okay, but that's how this market rolls. You know, they make it look scary for about half an hour, and then they turn the thing back to the upside. And the way to avoid getting shaken out in something like that is to buy the stocks when they're at the lower risk buy points rather than when they're extended. So you come in into stocks at the right point, you won't really have that problem. But I mean, that's how this market rolls, you know, and everybody's looking for the market to pull back because the VIX is so low. But I would point out something about the VIX, and you can go back and study this for yourself. And that is that when it reaches extreme lows, the market doesn't top right away. So it's not like it's a timing mechanism. You can say, oh, the VIX is below a certain price, and therefore, you know, the market's going to tank tomorrow. If you study it, you'll notice that there's usually like 1 to 3 months later it can top, but sometimes you'll get some sort of action in the meantime that gets the VIX, the fear level rising, so the VIX actually, shall we say, corrects to the upside to work off some of that fearlessness, and then that takes away the whole, you know, thing about the VIX being too low. But the thing is, using it as a timing tool is kind of stupid, so I really wouldn't go there. No real point in doing it. Anyways, let's see. I'm going to go through some more names. Did you look at Applied Opto? This thing is like a little rocket stock. It's back to its rocket stock ways, but of course the place to buy it is here, and then you get a base breakout on Tuesday, and now you're pushing higher. So now this 60 level becomes your reference for a pullback. So by that time the 10-day might be catching up. It could pull a little below that. So I'd watch that as a spot to enter the stock, a lower risk spot to enter the stock. And that looks pretty good. So anyways, let's see. Amazon we looked at. Amazon's just been holding the 10-day line, and it's obviously a juggernaut. But you can't, it's, you know, it's hard to get excited about it because the reality is, you know, you get like 40% in AOI in a few days, and Amazon is up from 860 to 960. Yeah, it's maybe, you know, 11, 12%. So not really the most thrilling move. One thing that's moving today, we've been talking about this in the morning focus notes. Those are coming from my notes on the VoSI focus list stocks and every morning. So you can see that it's en route to a pocket pivot at the 20-day moving average. But that was the spot to be buying it, because you notice yesterday the day before rather, it got, so that would be Wednesday, it got some support at the 20-day exponential moving average. And yesterday in the sell-off, the early morning sell-off, it pulled down, but volume wasn't heavy, undercutting these little lows in here. And now we're back out to new highs, and just like that. So, you know, you have to be waiting for the right spots. Somebody asked me, you know, how do you know if the buy point comes before earnings, you know, and then the stock moves after earnings, how do you get in? Well, you know, that's kind of a silly question, as if there's an answer, because the bottom line is, unless you're willing to play earnings roulette, you don't get in, okay, right before earnings, unless you're willing to take that risk and the potential that you're going to get smacked, like anybody who held into Snap's earnings got snapped. And I'll avoid all the stupid puns, I guess, they're all over the place. But notice something here. I don't know, this is kind of like, I'm looking at this at in the most ugly duckling way that I possibly can, and that is that you've undercut this low now. So here you are, you're down here, and of course it's over for Snap, but watch and see if maybe something doesn't occur to cause it to come back up. So here's what I would do, a very simple way to handle this trade. You don't need to do the shakeout plus X or all that other baloney, which is pure baloney, by the way. You just figure out, what is this low? Right here, the low is 1890. So if you get above 1890, at that point you pull the trigger, you buy shares, and you use that as your stop. If it doesn't work, you're gone, okay? But if it does, it could go all the way back up and fill the gap, because right now everybody hates Snap. I mean, if they hated it before, they hate it even more now. So, you know, that ugly duckling works that way. And you see that happen way too much in this market. Well, not way too much. If you're onto it, I think you can use it to your advantage. Here's like Cavium. Here's an ugly duckling Louis formation where you break out here, you break down. I think I talked about this one a couple of weeks ago and last week. But you break down, and you're holding along the lows and above this prior little flag here. Okay, so you're holding above that. And you jump into the stock there, and it pulls the 50-day moving average, which is here. It rallies back above it, pulls into it, holds, and now it's moving back and trying to retake the breakout point. So from here, you're pulling back into the top of this structure right here, which I would think is going to serve as support. So I would be, if I like this stock, I'm looking to buy it here. But you can see how, you know, this thing blows apart. And normally you'd be shorting, you'd look at this as a late stage failed base, you'd be looking to short on the rally back in the 50-day moving average, but it doesn't happen. It keeps going higher. And that happens a lot. And I think you have to account for it. I'm going to answer a couple of questions that we're getting. Health insurance innovations. What about it, Scotty? Yeah, you can see what's going on here. It's just moving higher. So I don't know if I'm going to buy it extended like this, but it looks good. I like this other one you've been in love with. This Etsy looks kind of interesting to me as an ugly duckling play. Now again, look at what happens here. You have after earnings, it just blows up, big break on big volume, but it closes mid-range. You might notice this. It closes right there. So it closes about mid-range, and now you get a jack to the upside, pulling back into the 20 line. I actually been watching this, so I'm long some shares here. The nice thing about it is that you can buy a lot of it, and it's very liquid. So I can come in and buy 10,000 shares. It doesn't budge. I was going to try and see if I could move it earlier and see how much it would take to move it, but you can come in and buy 20,000 and it still doesn't budge. So it's pretty liquid, and I have to say I like liquid stocks. So, and I don't necessarily see that as a bad thing. You don't have to necessarily move a stock when you buy it. Sometimes there's a seller there and you're just picking them off. So if it works that way, as long as it holds support at the 20-day exponential, which is at 10.99, so it's only 20 cents lower, about 2%. That's pretty tight. Resembles your other breakouts. Okay, on the HIIQ, is that what you're talking about, Scotty? Yeah, it does. Looks good. I say buy Twitter. You want to make some. This thing's going to 70 again. Now, I think someone's either going to buy them. I wouldn't be surprised if Facebook bought them, because Twitter is more of a social media rather than social networking type of site. So, anyways, I see EA moving higher. All right, you guys doing your job, pushing it up. Let's go through some more focus list names. Alibaba, this is just moving higher into earnings. So, you know, the 20-day exponential all the way up has been support. So if you're working this stock, you've been sitting in it all that time, unless you try to get too fancy like I do sometimes. Now, Baozun is interesting because we put it on in here, actually I put it in a VoSI Voodoo report. I talked about it, and then we added it to the focus list as well. So it has one run, and it goes up 15%, and then they slam it, and it comes back in, but it holds up. So again, here's the ugly duckling at work. You undercut some of these lows in here, and you turn back to the upside, and then you sit along the 50-day line. And I think we wrote about this 2 weekends ago, and I pointed out that you had one, whoops, not right there, 1, 2, 3, 4 pocket pivots right along these confluence of the 10-day, the 20-day exponential, and the 50-day moving averages. And so that led to this move up. It goes to a marginal new high, and then they slam it again. So this is very typical for this market and the way they treat stocks. Okay, and then finally the rule of 3 takes over. Okay, so one time, the first time people see it fail, the second time that people see it fail, and the third time they all get faked out and it goes higher, and boom, you're off to the races. So if you bought that one down here and you're able to sit with it, you're making some nice coin now. So me, if I'm playing this, I sell into this move and then watch it go 3 points higher. So that's how smart I am. But in this case, you could see the fact that it was a sort of rule of 3 type of play. So and it fakes everybody out by the time it decides to just blow higher. Anyways, looking good. You guys must be buying Etsy too. I notice it's inching up. Okay, where are we? CC Chemours or Chemours or whatever the hell it's called. Somebody needs to call the company and find out. We've been talking about this one. Find out what it's called, but we've been talking about this one for a while. The pullback into the 20-day line after earnings. It's spun around, and now it's just going to new highs. So you know that's bullish action. It looks like to me. And then you have let's see, Facebook. Now Facebook, one thing to remember about Facebook, it tends to be a concentrated position among mutual fund portfolios. If you check this, I think it's like 68%. You can go to Yahoo Finance. And if you're looking for institutional sponsorship data on stocks, all you have to do is type into Google, on the Google search engine, you type in the symbol and then major holders, and it'll pull up the Yahoo Finance page that has all the information for those of you who don't have fancier systems like we do. So, but that'll tell you, you'll see that 68% of mutual funds, or mutual funds rather, own 68% of the float. That's a lot of stock. And what happens is, and this is something I know from my days as the head of the institutional services group at O'Neill, where we advised, you know, 700, close to 700 mutual funds, is that a lot of them have charters where they can only own 2% of a position or 5% in their portfolio. Will Danoff in the Contra Fund, his charter allowed him to own up to 10% of a stock. So he'll concentrate and he'll play something big. I know in the mid-2000s he was big in Apple, and that was a 10% position the whole way. But here what happens is this thing will run up and you'll see some volume hit it. But it's just some mutual funds, I think, reallocating. It's an allocation trade, or allocation selling, in other words, where they're selling the stock down to get their position down to what they're mandated to have. And so that's a lot of times what also creates bases in strong stocks. And what happens is some of the other the mutual funds that have a heavy concentration or will be unloading, but new ones will be coming in and upping their position. And so you can expect Facebook to form a base in here. Notice the volume's drying up. What's the volume today, Dr. K, on this turkey? Minus what? We're running minus 20 right now?
Yeah, I'm getting minus 24.
Okay. And so you're drawing up. I mean, if this thing ran into the 29, it probably comes into a buy point. But you know, this thing is a social networking juggernaut, and it's probably going to go higher if the market goes higher. Don't be surprised if you see it at 200 someday. Whether that comes sooner than later, we'll see. But I mean, this thing probably wants to go higher. Anyways, somebody says audio, 2 question marks. Maybe that was before we started, because I was looking at some charts before we started. But usually if there's an audio problem, since nobody else is mentioning it, it'll be your own browser or something like that. But in any case, let's continue down the list here. JD, okay, that had a viable gap up after earnings. And you notice here that you had the viable gap up, and it looks like it's way up there, right? And nobody's going to buy it, especially somebody who reads IBD is not going to buy it. But the thing you'll notice is that it holds very tight for a couple of days, and then on the third day it pops and goes higher, and it's just going. So, you could have bought it there. Lumentum is acting pretty well. We like this one. We talked about this one a couple of weeks ago. And of course, somebody mentions about how they sent some analyst comments. But again, analyst comments are BS. I would pay no attention to them. Watch the price volume action of the stock. That tells you everything you need to know. And so I've read some other analyst reports over the weekend that in fact they're reporting huge orders for this new 3D sensing technology. So it looks to me like this puppy's a buy, and it's going higher. So now if there's some announcement and somebody else gets the order for 3D sensing stuff, then I guess the stock will get crushed. But assuming that's all it's moving on, because they're talking about the telecom side, the fiber optic side of the business, which has also been dragging down stocks like Claro and Sienna and others, is weak. But Applied Opto is not running into that problem. We can see that. So I think it's a mixed bag. You're either on the leader or you're not, and so that's really the trick here. So this is Chem Ors on. Okay, thanks for that, Steve. So now we know the mystery is solved. Chem Ors. All right, I like it. We talked about Momo, Nvidia. We talked about Snap. Square is just hopping along. I wouldn't be surprised if somebody bought them. They're moving briskly today. But again, you get a Bible gap up, 1, 2, 3, 4, 5 days tight, volume drying up, and it's going higher. I would be, my tendency would be to sell into this and let it come back in, but we'll see what happens. But so far, if you own it and you bought it in here, you're up on it a little bit. But I wonder if they're going to get bought out. Now, do you know who people are talking about as their #1 competitor? No, not people. PayPal. And PayPal is actually acting a lot stronger. And that was a Bible gap up. And notice how the stock acted pretty well for 3 days and then took off. And what I've noticed is if you're going to catch a Bible gap up move, and it's going to move, okay, it'll do it about within 2 or 3 days. So if you see tight action like I'm talking about with the EA, and the other example that's sort of looking backwards, but I saw it at the time, here's the tight action for 2 days after the Bible gap up, and then it took off. So if they work, they're going to work pretty quickly and take off. So that's something you want to be watching for. Some of them will take longer and they'll screw around with your head, but I think if you catch one and it does this, so Coherent's doing the same thing. So what I would be looking for here is a move higher very quickly. Anyways, and that's one way to jump in them, and if they don't work right away, you can back off. But of course, that will bring in Murphy's law of Bible gap ups, which is if a Bible gap up occurs and the stock goes sideways, you buy it and it goes nowhere. The second you sell it, it will go higher. So that's something you have to watch out for. Tesla, looking like garbage, but we talked about this, and it's an undercut and rally. It undercuts all these lows, turns and goes higher. And now you're back up at the highs. Okay, so you look at a V-shaped rally. In the old days, that usually told you were going to come back. You're going to get a pullback. So I guess if you did, I'd look at the 10-day line at 315.92 as my guide for support. If not, it may just bounce around for a while. But this thing's killing the shorts. It's a short killer, and I'm sure a bunch of shorts piled onto the thing here, and it turns back to the upside and screws them all. So. But people, I think, in general, tend to get too emotional about Tesla. They want to hate it or love it, and I say you do neither. You just go with the chart action. And so if you see an undercut and rally, if you hate Tesla, so if you see this break last week, I guess it was, and the stock's getting slammed, I guess that was after earnings, and you hate it, you're going to want to short it, and you will be completely closed off to seeing that it's a potential undercut and rally, which if you guys follow me on Twitter, I was babbling about it all morning long at this is probably setting up as an undercut and rally, and sure enough, it did. Trade Desk came out with earnings last night, and they've gapped up. So there's a big, bad gap up, and you could have bought it this morning if you're watching it. And remember, I was telling you how this stock, so I'm going to go over this. I want you guys to think about this when you're looking at other stocks. And I've talked about this before, but I think it bears repeating, is that you get a nice move. This was a breakout, okay? This is, whoa, what happened? This is a big breakout through a base, and it ran up, okay? And then it corrects, and it retraces about half of this move from here. And we've had this on our list for a long time. And so now you come in, and this is a normal base after this big move, okay? So, I mean, what is that move anyways? Like, what is it, Dr. K? 50%, something like that? I don't know, somewhere around there from
Over
here.
50.
Yeah, so, you know, you get this kind of a move, and it's like 4 weeks, I think. It's going to build a base, and it's a thinner, smaller stock, so it's going to probably be a little bit deeper. And and then I was telling you guys a few weeks ago that you know, it's trundling along here. Yeah, it's violated the 50-day, but we know how that works in this market. But the other thing is, it's also, you can see it's trying to form a base. So you get a pocket pivot in here, and I guess if you bought it down in there and it was trading at 39 or something ahead of earnings, you could have sat through with a small position, but that would be tough to do. But you could have bought it on the viable gap up. So when people ask me, you know, well, what do I do? A stock is at a buy point before earnings, and I didn't buy it, and you can't do anything after earnings. Wrong. If you get a viable gap up, you can buy the viable gap up. That's the whole beauty of a viable gap up. You know, well, IBD is telling you that something is extended from the breakout point. It's actually quite viable. So
Also, if you bought this one where we were talking about it initially, you'd have a 10% or more cushion prior to earnings, and so you may decide to hold part of your position into earnings, you know, knowing you got some sort of cushion.
yeah.
You know, and the other thing is when a stock does this kind of formation, and this is very common, even in markets that are more forgiving, when it violates the 50-day in this formation, because everything's contextual, as we know, that's not a real violation because it doesn't break below the low of the, when was that, late March, it set a low. And that'll happen as a stock goes sideways. The moving averages, of course, will slow down, and they will get violated. But that's not a standard violation by any means. I wouldn't count that as a violation. Rather, it's just this is more the formation of a normal base, and then it starts to move to the right. You know, it starts to move higher after mid-April. So you know, keep violations. Well, keep everything in context. That's really part of the key to good investing.
Yes, it is. Anyways, where were we? Vive is the last one. They got earnings coming up at the end of the month, but they just keep going higher. You know, we were talking about this one down here. You had the pocket pivot. That's when we put it on the focus list, and it's just trundled higher. So it's looking pretty good. Dow's coming off 30 points. Doesn't seem to me that the indexes are doing all that much. You know, they're way up here. The Nasdaq's up at the 10-day line. And they're not, it's, yeah, the Dow's coming off 30 points, and yesterday 140 points, but what does it look like? You know, 140 points on the Dow yesterday, all it did was, and I saw this happening, it bounced off the 50-day line, but the Dow stocks are Dow stocks, and to me they're kind of blah. So the real juice is in some of these other names like Nvidia, like iRobot, like TTD, you know, like Now, like EA, all the things that we've had, Momo, the things we've had on the Baozun, you know, those are all the things moving. So that's where you want to be, and I won't really worry too much about what the Dow's doing. In fact, if we got some rotation out of these big stocks and some broadening out into other areas of the market, then you could see the S&P, which is basically just trundling along these prior highs. So there's the March high here, and it's just kind of finding resistance along there, but it's just building like this cup with handle. So it seems to be implying that you're going to get some kind of a breakout at some point. And again, as long as you see the Nasdaq holding up here, then you could get some kind of breakout. And if that happens, then everything starts hitting, and it's all going to happen while everybody's telling you that the Trump rally is over, that that his agenda isn't going to get passed, and the VIX is at all-time lows, and blah 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 blah, and that doesn't get you anywhere, unfortunately. And the trick is just watching the stocks at this point. Somebody's got a question about LogMeIn. I actually think this looks interesting, but you know, it's a pretty basic idea. It's pulling into the 10-day line, filling the gap. So if you like the stock, here's what it looks like on a weekly chart. Then you're sitting here and filling the gap. So what would be, if you wanted to buy it, your stop would be you know, the high here at 113.80, which is pretty tight. It's trading at 114.68, so it's not like you couldn't take a shot at it if you wanted to. And I've been watching this. It showed up on one of my screens. I'm always looking for voodoo type action, and the other day it showed up as it pulled into the 20-day exponential moving average. I'm watching to see if volume dries up. Right now you're minus 37% below average, so you're probably in a position where it's either going to go or blow. So you could use the lows here are at 112.80, 113.30, so that those could be your stops, or you could give it a little more room down to the 20-day exponential. And I've just been watching this, just waiting to see if I want to pull the trigger, and the volume now is minus 37. What are you showing on this thing, Dr. K?
Minus 39%.
Yeah, so it's declining, and it's just holding tight, so it could turn and go. I think they have great technology. They had a big jump in earnings, 143%. Next year, or this year, they're going to do 387 a share, and next year 487 a share. So, there's a good reason to be buying this here because, number one, you can keep the risk very low. You had a viable gap up, it failed. Okay, big deal. But everybody knows a Louis pattern, so it could be viable here. But you should be able to evaluate this pretty easily unless you're a total newbie to the market. So basically you have a gap here and you fill the gap. So now it finds support at the bottom of this, what they would call a falling window. So this would be the window. Here's the window in here. Let's see if I can draw it. There's your window. It's a 4-pane window like that with a nice little windowsill and some flowers. Let's see if I can draw this properly. This flower is probably going to die soon. But in any case, there's your window. There's your falling window. It finds support at the windowsill, and it's holding. So that would be a reference point if you like the story. You know anything about this story, Dr. Tiz? Look good?
Yeah, no, it's definitely the leader in its space. It's just all the allowances of remote access, which is obviously becoming more and more prevalent these days, and it's capitalizing on that. So, fundamentally it's strong, and the last quarter, both sales and earnings skyrocketed, 135% on sales, 143% on earnings. So it's looking good.
Cool. Well, I just bought 2,000 shares, so we'll see. Little starter position there, see if something happens. If it starts moving, then I'll jam into it. So now you guys go in there and start pushing it up for me, okay? Anyways, where was I? Any other questions? Where are we? It's 9:39, so we're about 40 minutes, 38 minutes into this. Let's see. Etsy looks like it's ready to go. Can you guys jump in and buy some more for me? Anyways. Looking good. Okay. Somebody says, Gil, I remember I saw a YouTube video about using HDSI called HDSI with Gil Morales Pocket Pivots. Unfortunately, it's from January 2014, so I guess it's a bit outdated. What's your today primary HDSI screen to filter for interesting stocks? It's the same one in the video. It's like stocks up on volume or something like that. So I don't have any like favorite screens. Okay, I'll show you here's my HDSI warehouse view. Right now I'm showing all securities. These are stocks down on volume. So I basically will run a basic filter, price down, erg over 150. That's for ugly stuff. And my favorite list to look at every day, and I look at this every day, is pretty much here. You go to Smart Groups. Whoops. Go to Smart Groups and then go to Ian Woodward and Ron Brown. Let me open that up. And then you go down here to Stocks and Groups Moving to the Upside. And I look at that every day and you get lots of great ideas. So it's the same one I look at. So I don't, it's not like there's some new magic screen. And the other thing is don't be a silly goose and believe that somehow there's some magical screen that you have that's going to find you every magical stock. You got to do a lot of work, and I look at a lot of charts. So I'm basically interested in screens that show me an interesting group of stocks. So you got 100 of these names here. It shows 101 because I think there's an index in here, but I could be wrong. Yeah, see the index. There's the index up at the top. So that's one. So it shows 101 here. I don't know if you guys can see this. It's kind of small. One of the things they need to do, I should probably tell them, is that they need to make you have the option of a bigger typeface. So anyways, where was I? And that list will show you a lot of great looking stocks, and they won't come up. They won't be in IBD, and they won't be showing up on volumes. Because a lot of times they're just stocks that are acting well and are hanging tight sideways. So, you know, that's look, now you guys aren't going to buy log me in. I better go buy some more before you guys push it up a buck. Jeez Louise. Okay. Don't be lemmings, you guys. Do your own homework. Think about what you're doing. One of the questions I hate is when people ask us a question, something's obviously, you know, up there or whatever, and it's almost as if they're looking for us to give them some prediction, and I really don't do that. Because I don't know everything, and I screw up a lot too. I make a lot of mistakes. I also had someone email the other day wondering what software I use to log my trades in, and that will give me a readout of my win-loss ratio. And I think to myself, oh, there we go. There's that stupid one again, the win-loss ratio. People your win-loss ratio means nothing. We talk about this all the time. It's how much money you make when you're right versus how much money you lose when you're wrong. So you can be right once and wrong 9 times. So you have a 9-to-1 loss to win ratio, and I guess that's a terrible thing. You should shoot yourself if you do that, right? But what if you made $1 million on the one that you were right on? You only lost $100,000 on the ones you were wrong. Well, guess what? Who cares about a win-loss ratio? There's so many stupid concepts out there, and they kind of make me sick. Like yesterday, somebody was telling me, but don't you wait to the first 35 or 45 minutes before you buy a stock? And I guess there's some couple of goofballs, one of whom used to work at O'Neill with us, who resigned after Bill O'Neill took away money because he was lagging the group, and I won't mention any names. But I remember in '98, this guy was up 10%, and Bill was complaining to me about this. He's like, well, so-and-so, like I said, I won't mention names, so-and-so owns 10 stocks, and he thinks he's God's gift to money management, and the rest of you guys are up a minimum of 45%. And that was in the first quarter of '98. So Bill started taking money away from him. He left in a big hissy fit, or whatever they call it, and now I guess he's writing a book with another guy that I think is kind of a goofball, but, you know, I won't get into calling people names. And in the book, apparently, they say that you've got to wait 35, 45 minutes. That's such a pile of crap. I've been on the floor of the New York Stock Exchange, and I've seen millions and millions and millions of shares executed at or around the opening. So the idea that it's amateur hour is a bunch of BS. And the other thing is, let's just take an objective example. We don't need to, like, get into this, but to me, this sort of stuff, this one-size-fits-all rules for everything, it's just sort of stupid, and it shows to me a lack of intellectual integrity or just intellectual capability. Because number one, how does it test out in real time? Well, let's just look here real quickly. Let's go to Nvidia. Yesterday at the opening, Nvidia hung out at 120.07. I was actually buying stock in the pre-open. So I don't know if that's amateur hour ahead of the opening, you know, or whether you're supposed to wait no or later than or earlier than 20 minutes before the open, or 15 minutes, or 6.237958 seconds, and not 1 nanosecond longer to buy stocks. But my rule is, if it's in position and you like it, buy it. You know, you don't need to worry, well, is it 45 minutes and you're going to wait till 45 minutes and 1 second after the opening bell, and then you're going to buy it. If you did that, let's see, it opens up at 120, and by that time, 45 minutes later, it's trading at, 123.5. So that's smart, and never looked back. So you buy it where it's at. It was right at the breakout point. 120 limits your risk immensely, because that's about the top of the base. Maybe it goes down to 117 or something, but that's a couple 3%. So you buy it there. Okay, now let's look at yesterday. The day before on the Bible Gap Up. Well, on the Bible Gap Up, right at the opening, I'm assuming you guys can see. Let's make it bigger. Right at the opening, here's the opening bell right here, actually, on this bar. Okay, so just before the opening, I'm watching this thing, and it's breaking before the opening. Then right at the opening, it bounces at 114, so it sets a low, and I notice at the same time it undercuts this low here on the 620 5-minute chart, at 4:40 in the morning or whatever. I don't know who's trading at that hour, but my platform doesn't let me trade until 5 o'clock, so that would be 8 o'clock Eastern time, but somebody's in here trading it, I guess. There's hardly any volume. But the stock turns right at, so it's right there. You have the Bible Gap Up, it sets the low, you buy it within the first 5 minutes of the day, and guess what? It never looks back. So if you sat around for 45 stupid minutes, okay, what are you doing? You're coming in at about 7:15, about 4 points higher. So, I don't know where people get this crap from, but in my view, it's like people want to write books, but they're very sloppy about what they write about. And I think even the O'Neill organization is very sloppy about their statistical work, and it's really not complete. And they use a sample size of 5 or 10 stocks to come up with their conclusion. But just suffice it to say that a one-size-fits-all rule is a stupid thing to use. You got to understand each stock, and you operate on the basis of the price points, not what time of the day it is, for crying out loud. So I don't know where people get that stuff from, but well, I know where they get it from, but it's baloney, and anybody pitching that is kind of an idiot as far as I'm concerned. But I'll tell you the story. I told you the story about this one person, so and the two of them together make an interesting pair based on my experience. Anyways, AEM. What about it? Agnico Eagle Mines. I don't know. It's drifting above the 200-day line. I think, if you're looking at miners, you got to look at gold. Gold looks like it wants to go lower to me, but what do I know? So maybe it's going to rocket to the upside. It seems to me, though, that the economy is fairly weak. So I don't know if I'd necessarily want to be buying gold or miners. So someone's asking about SLW too, but there's another situation. I don't know. It's kind of between here and there. It's at the 50 line, could reverse, but I'm not going to buy it. And I don't really think you need to own. Let's look at the weekly charts on these. I don't think you need to own precious metals. It's too news oriented. And if the Fed starts raising rates, which it looks like they're going to, despite weak economic data or whatever, then I don't think you want to be owning these. There's just too much news risk. I think the same thing can be said for financials. JP Morgan looks like it could, it's way up here. If you look at this, and I don't want to say this because anytime you think you're looking at a head and shoulders formation, it doesn't pan out. But on the weekly chart, you sort of see a head and shoulders here, maybe forming, and it's going to break. But that said, if you look at the daily chart, which is up here, that's actually much more granular. It has sort of an ugly duckling look in that you did undercut this low here. And JP Morgan's the one to watch. Is one of the biggest, the big stock bank of all banks. Citigroup's another one. I'll look at that next. But it's just hanging in here. You undercut, you run up to the 50-day. That becomes a short, so you can scalp it. But undercuts this low. Now it's bouncing around. I actually shorted this morning and then picked off a few cents and then covered it because I could see it turning on the 620. And every time I try to come in and short something, the one thing I notice is that it doesn't get any traction whatsoever. So let's see. Twitter seems to be running out of gas here intraday. What's going on here? God, I was all excited. It's moving higher. I thought it was going to go to like 25 in one day, but it basically runs into some overhead resistance. That's probably typical. But the EA is moving, and so is Etsy. Maybe Etsy's the ticket here. So. I'm going to sell Twitter and try and see if it pulls into a little bit more, maybe undercuts these lows. So let's see. AUPH. What is this? Oh, Arenia. Oh, yeah. I had my broker buddy who's a biotech queen, I guess. He was telling me all about this, and they've got some interesting technology. Small molecule company, I think, and they're coming up with a cure, which is still in the early phases of testing for lupus. So I was looking at this. It's kind of an interesting pattern. And I guess the upside here is if you buy it, the most you can lose is $7.70. So you could buy it here and maybe put a stop at the 50-day line. But I thought the technology was interesting. You might look into this one, Dr. K. But it looks nice. It looks pretty. You can often find biotech patterns that look like this. But if the trials don't go through, it's going to tank. But if the trials do go through, you could get a gap up to 50. Who knows? But it's an interesting pattern, yes. I thought all molecules were small. So did I, Scotty. And I guess some are smaller than others. But like I was saying last week, the small molecules, they're small and they're cute, and maybe they're furry and fuzzy. But I think they all are fuzzy because they're Their atomic structure is the electrons are clouds, fuzzy clouds. So I guess they're all fuzzy, but some molecules apparently are smaller than others. Dr. K, do you have a clue about what constitutes a small molecule versus a large molecule? What are
Well,
they really talking about as a
they're organic.
scientist?
They're organic compounds that have low molecular weight that help regulate biological processes, basically.
Why do they
And they
call them
tend
small?
because they have a low molecular weight, and their size tends to be around like 1 nanometer, like on that level.
Okay.
So most of the drugs today are small molecule drugs.
Cool. Okay. I can dig it. Let's see. Any other brilliant questions? Let's see. Going through my list of stuff. You know, all these big stock names. Netflix is on our, is it on our focus list? Yeah. I mean, it just keeps trundling higher, you know. If Apple brings back all their money, they could buy these guys out. They just issued like another $9 billion in bonds, and they have to do that because they don't want to bring the money back that they have overseas, which is somewhere around $235 billion. You know, there's like $50 of cash in each Apple share. So you wonder why it keeps going higher? Because it's a value buyer's love affair. And it, you know, and even if you're just looking to buy something having some nice upside move with not a lot of downside in it, that's been working out pretty well. So, I mean, I thought about buying this on the Bible Gap Up, putting my whole account in it and just sitting, and I probably should have because I'd be up about 20% right now, which would be more than I'm doing right now anyways. But the market's tough and it's tricky, and things are all over the place, and you have to be enterprising, creative, and you know, find the things that aren't so obvious to everybody, and of course that includes the ugly duckling situations. NetEase came out with earnings yesterday. This is kind of interesting because all of the Chinese names are on a tear. So it came out with earnings, and to me this looks like it's building a new base. So even though it got tagged on earnings, I'd be watching this pullback. It's below the 50-day line, but I'd be watching this pullback for a possible ugly duckling setup, which I think is very possible. Where, because they tag it, and if the volume dries up and it sits along here, that could end up going higher. So, but you know, we've seen obviously Momo has been on our list, Baozun, those are the biggest movers percentage-wise. But you have Weibo is coming out with earnings next week, and that broke out. And again, here's the ugly duckling setup. And again, here you have one move to the 50-day line, it fails. Second move to the 50-day line, it fails. And that was even on a pocket pivot, but it's a little bit extended. It is a range breakout because it's coming up through the highs of this formation. So it breaks out here, and that's a pocket pivot right there. But that fails, and it comes in, holds tight. Now it's got the ugly duckling look. And of course, in general, you know, stock had a big move, so it could be in a new base building phase, which is exactly what was going on here. And you had another pocket pivot here, okay, right here, and that one worked. So after one failure, two failures, the third one, the rule of three, just like Baozun getting through that $17 area, works, and it goes higher. You have a pullback into the 10-day line on a voodoo pullback. There's a light volume right there, and now we're back at new highs. You broke out, and earnings are coming out. So you can't buy it now, but it's acting okay. Can't really complain. And you have also, you know, BABA we've looked at. JD is continuing to go higher. Everybody's talking about China's, you know, got some problems and issues and blah, blah, blah. But I can't say that it's showing up in any of these stocks outside of NetEase. So anyways, you know what? One I think is interesting. This is on a VoSI Voodoo report I wrote about, and it was actually good for a nice little trade. They came out with earnings. You have an undercut and rally here, MuleSoft right here, and that's actually tradable, and you get a couple, maybe a buck or so, buck and a half, and now you're pulling in, volume's drying up. I don't know, maybe this is setting up in an IPO base, one to keep an eye on perhaps. Let's see, the Dow's off 32 points, and S&P down 5. NASDAQ down 3. Is volume up today, or is it lighter?
I thought we were lighter.
Yeah, we're running way lighter. So yeah, I don't know. This market looks like it's revving to go higher. So you know, I'll sell into extended moves and names, but I don't see any reason to be running for the hills yet. And anytime I've shorted something, I'm able to catch maybe a little bit of juice on it, but for the most part, it's a buck, maybe 75 cents. Caterpillar was like that today and yesterday. JP Morgan was. First Solar is another one that I was able to pick off, but I've been playing that long and short. So it's a little bit of a mixed bag, and I think you just have to be looking for your opportunities and be resourceful and be buying at points where you're not going to get shaken out when the market does pull back. But I don't really see that we're in a world of hurt here in terms of what the actual stocks are doing. So, anyways. I'm watching Grub here. Here's another one. This might become shortable here. It's had a big move. It's up at the top of the space. Notice it came straight up off the bottom on the weekly chart. I'm kind of watching to see if it fails, but it's hanging along the 10-day line. But you can see you came out here, and so you're trying to hang in here. I think this is a massive short squeeze, and you had like 17 million shares short in this puppy, and they took it out, and I think maybe they finished covering. So let's see. Let me get rid of that. So if they have, maybe this thing comes back in. I know that its cousin, not necessarily a close cousin, I guess, Yelp just got destroyed on earnings, and that thing just crushed. Maybe that's a short here. Anyways, so they'll probably hold the market down like this all day long, and then it'll scoot into the close. And everything will jam, so who knows. The first thing I want to suck in shorts, because right now everybody's convinced that the market's going to roll over. If you're worried about the market, then just buy a little bit of UVXY. You don't need a lot, because if the market does blow apart, it's probably going to go to 25 or 26 or something, and it'll help hedge you. So if you get nervous about the market and you want to sleep, you can always throw some of this in your portfolio. The only downside would be if the market gaps up 200 points and they take it down 2 points on you. So the other thing I was thinking about with the way this market is, and admittedly, the market's in a bubble because of the fact that the Fed is just has been pumping liquidity into the system for the last 9 years and zero interest rates. A really good book to read is David Stockman's new book. It was actually published in September, on September 16th, just before the election results. And I believe it's called Trumped, Why the U.S. is Screwed or something like that, and how to get out of it. But he talks about, the Fed and all the silliness behind the whole rationale of how they operate, and the idea that a committee of 12 people can really control the economy, and the jobs numbers, and how that's a bunch of baloney because it measures the number of heads working. So if someone works 1 hour, they're counted in their jobs tally, whereas he believes that you should be talking about actual hours worked. And he says if you compare actual hours worked compared to prior levels over the last 9 years, and we're actually, the unemployment rate on the basis of hours worked is 43%, which I thought was pretty interesting. Anyways, it's a good book. I would suggest reading it if you're into that kind of stuff. Just don't let the whole depressing sort of angle where he tells you how screwed up everything is, don't allow that to color your view of the market. Again, it's always about what the individual stocks are doing, not somebody's macro opinion. And I think Dave Stockman is a smart guy, and he has a libertarian viewpoint. So even while there are points where he is critical of Trump, it's not an anti-Trump book by any stretch of the imagination. He actually is more critical of Hillary Clinton. He believes with Trump there is a chance that the U.S. can right itself. But with Hillary, the status quo, which the financial industry loves, because they're getting free money and they can speculate like mad. The financial industry loves that, and that's why they backed Hillary. And she would have been a lot worse. And he was saying that if she wins, the market will crash and whatever. But but it's a good book. Somebody says Tep wants to know if Nvidia is a high tide flag. Is he visiting you, Scotty? Is Tep up in Utah? Answer? No, chat room. Oh, what chat room? Some other chat room, apparently. Okay. Any other questions before we sign off? Because we're pretty much done. But, you know, you guys get a good idea. There's some stuff actionable, giving you some ideas. Things look okay. Secret Captain chat, I like it. Any other last questions? Okay, well, that's about it. So, as always, thanks for showing up. Have a good weekend. You guys will catch you next week, and happy trading.
So long, everyone.